Good morning, traders. Welcome to the Dosh Trader Morning Call video for Wednesday, December 16th. Well, guys, it's all about the Fed. Today is the most anticipated meeting in the last probably 9 years. Are they going to raise? Are they not going to raise? And quite frankly, if they do not raise, I think the markets are going to be in big trouble and we're going to sell off pretty hard because then we're going to have that uncertainty in the cards again, in the markets, if you will. I think they're going to raise. I think they have no choice. Maybe the markets kind of push a little bit lower and then rally from there. Or is it factored in already? No one knows. I don't know. No one knows. The only thing you can do is wait for the Fed, let the markets react to the Fed decision, and then you react to the markets. And that's the safest way. No reason to have a bunch of longs or shorts on before the Fed announcement's crazy. You don't want to do that. You can see we have some pent-up volatility. We are coming into seasonal strength right now, starting supposedly that so-called Santa Claus rally, starting today, believe it or not. And again, where do I get that information? Get a lot of emails. Traders Almanac, guys, really simple. Get a good Traders Almanac, and I look at it every single day. And seasonal trends, history repeats itself, repetitive patterns. It's really, really important. All right, so I'm just going to go through these charts real quick. Again, it's all about the Fed. What this does and what we've done yesterday, it means absolutely nothing until we know what the Fed is going to do and how the markets react, because everything could change. Okay. All right. As you can see here, we had a nice little day yesterday. We had a little bit of a pop up from this low. Okay. And what happens? So now we have this big M pattern. Let me show you. Let's go into the Dosh Trader, and you can see here. There's a couple of patterns here. You got the first thing here. You have a nice bull flag, right? I mean, you could see it here. Let me just get that out there and bring that down a little bit. All right, and then make that little flagpole. I mean, so you got a flag pattern here, a beautiful bull flag, and that we really came off the lows here. Or do we have an M formation, right, which is this right side, left, right, that lower high from the previous high, and here's the neckline right up in here, okay? So do we have that formation where if it does break lower, this is a bearish pattern, and the bull flag is a bullish pattern. So we have a little bit of indecision here in the spiders, and we're going to let the markets tell us which way it wants to go, and we're just going to follow price, right? That's going to be the safest way, guys. You're not looking to be a hero. We don't want to be chasing a price and to see, well, now I'm wrong, and I'm down a lot of money. We don't want that, right? Let's be patient. Let's let the Fed come out. Let's let all of the crazies come out and let them do their thing, and then we're going to step in and ride that little bit of that meat of that move, and that's really what you want to do. Okay, now I want to talk to you about, speaking of the Fed, obviously it's going to affect a lot of asset classes throughout. It's going to affect the UUP, which is the dollar ETF, and as you can see, and what I want to do is I want to actually, let me go into the trend line here. What we have here is a beautiful, and I like to draw this right in front of you guys. So those of you who are new to technical analysis, here's a beautiful bullish fallen wedge. We just broke out of that wedge yesterday. Now, it really means nothing because if the markets do not like what the Fed did today, this could just change, right? But we do have a beautiful bullish fallen wedge, and we have a very nice big bull flag pattern here. All right, and you can see that from here. You take that low, and you see that flag, nice big flag. And if you see, here's the flagpole. And let me just kind of write that up here. You can see that flagpole. We just broke out of it. Now we have another beautiful bullish fallen wedge pattern. And real simple how to draw these. Guys, if you want to send me an email, be more than happy to explain it to you guys. Not a problem. Very easy to do. And then you just got to learn how to trade them. But you can see here another bullish pattern. If the dollar does rise or takes off, we're going to have continued pressure in gold and crude oil and pretty much all commodities across the board. Okay, here's GLD. I like the GLD. I do like it, but I like it below 100. And then I'm going to start looking to buy the GLD, start averaging in very small position into the GLD. I think if you tag the GC contract, the futures, which is around 980, 990, I think that'll put an interim low in the gold contract for quite some time. I think you don't see that for a while thereafter, okay? But again, we need to see what happens. USO, which is the tracking of oil, USO, it's right around 11 and change. I like it below 11, and then I think that would actually move that market pretty much from there. I personally haven't seen, I don't remember seeing USO at these levels for a long time. I'm doing this 28 years. So just keep that in mind. I think you're going to get a nice low. Crude oil, the CL contract, I'd like to see that go anywhere from 32-ish to 33 and a half, even 34. I'd like to see that before I start nibbling in the contract. Transports, what can we say, guys, right? I did this beautiful trend line. We had that symmetrical triangle. Let me draw that for you guys again, and we broke that triangle. Very bearish pattern. We have market divergence from the transports and the Russell all year. It will kick in. It's only a matter of time. But it will kick in, guys, okay? All right, let's take a look at the IWM. You could see that here. Another bearish pattern here. We have a nice M-top formation. Like to see this a little bit lower, but I'm still going to call this an M-top. Here's your neckline. We're back testing neckline. Again, 2 leaders not leading. That's not a good sign for the market down the road. Lastly is the Qs. You can see this clearly identifiable M pattern. Here's your neckline right here. Let's go grab that DAS Trader, and we'll just put that right there. And you can see that if we breach this, I think all hell's going to break loose in the market. And remember, guys, this is influenced by only a handful of stocks. Amazon, Google L, Facebook, Apple, Priceline, Gilead Science. These are the ones that you got to watch and pay attention to if you really trade in technology, okay? Hope it helps. Be safe out there, guys. Use your stops. Let the Fed announce before you guys do anything, all right? We'll talk to you tomorrow. Take care.